From Daily Forex, this is Chris taking a look at the British pound against the Swiss franc. The British pound initially pulled back against the Swiss franc, but we have seen a certain amount of Swiss franc selling across the board, and it's worth noting that we are now trying to stay above the crucial 1.05 level here. This is a large round psychologically significant figure and an area that offered a little bit of support about a week and a half, 2 weeks ago. So now the question is, can we stay above here? We did form a nice hammer on Friday, so it did look a little bit exhausted. The thing about this pair that I see at the moment that keeps me somewhat bearish is the fact that the British pound itself is fairly weak, but looking at the 50-day EMA just above the 1.06 level, which acts more like a downtrend line. The 1.06 level previously had been massive support, and now that it gave way, it should have a certain amount of market memory coming into the picture. With this being the case, I think signs of exhaustion probably continue to get sold into. Although, again, you have to worry about the Swiss National Bank when it comes to not necessarily this pair particularly, but the Euro Swiss. And if the Euro against the Swiss starts to really fall apart, then you have a situation where the Swiss National Bank will short their own currency, and they'll do it across the board just to keep the forex markets in control. I think we've got a bounce here. I think it's a short-term bounce. The interest rate differential definitely favors the British pound, but the real proof will be if we can break above the 1.0650 level. I'm not saying we can't do that, but I do recognize there's a bit of work to be done before that happens. If we do, in fact, clear that, then it could be the beginning of something pretty big. Until then, I think rallies have a lot of proving to do, and signs of exhaustion probably get sold into.